Good afternoon and welcome to NYFP. Today I'm joined by Richard Goldman, CEO of Rydex. Hi Richard, thanks for joining me.
Nice to see you, Remy. Thanks for having us.
Well, you did ring the opening bell this morning, and last week your all-world MSCI World Trade ETF began trading on the New York Stock Exchange. But could you give us a breakdown in terms of country as well as stock allocation?
Well, it's an equal-weighted ETF that was launched last week, and it's consistent with the 16 other equal-weighted ETFs that we've launched. And it's a very simple concept. We take all of the stocks that are in the index, and we equal-weight them all. And the benefit of that is that there are no bets in the portfolio. There's no concentration. So we have equal exposure to the large cap stocks in the benchmark and to the small cap stocks.
You just touched on some of the advantages, but are there other advantages in terms of risk exposure?
Oh, yes. We think there are several advantages. Many of the investors that are out there who have invested in indices, whether they do them through ETFs or other vehicles, typically invest in a cap weighted. So the largest stocks in the index are weighted more than the smaller stocks. And we think that that's been flawed and that it's somewhat antiquated, and that investors really aren't getting what they think they're getting. So the advantage of the equal weighting is that there's less concentration in stocks, less concentration in countries, and you are equal weighting. So you really truly understand what you're getting. You're not making unintended bets. You're not taking risks that you may not think you're getting. And as a result of that, we've been able to deliver very strong competitive performance, actually outperforming our cap-weighted competitor.
Well, do you think there are any disadvantages?
I really think it's a superior implementation. You know, cap-weighted indexing has been around for a long time, and investors are getting more sophisticated, more demanding. They have different needs than they had years ago, and they're getting more intelligent about how to match their asset needs with their liabilities. And these products and these ETF offerings are giving clients a smarter way, a more intelligent way to gain exposure. They have a tremendous amount of liquidity. They trade efficiently, and they're fully transparent. So relative to other alternatives, we think that these represent a very compelling value proposition, and I really don't see any disadvantage to the way in which we implement the portfolios.
Okay, Richard, last but not least, before we wrap it up, investors are keeping an eye on the economic recovery that's happening around the world. But in terms of the short term as well as the long term, what is your forecast in terms of growth?
Well, what we have seen in the last 60 days is a real increased sense of confidence in U.S. equities. Investors have been scared. They've taken a holiday from investing in equities. And if the last 60 days has been any indication of interest in coming back into the market, investing in equities, our RSP, which is our equal-weighted S&P, as an example, has seen almost $1 billion of net new flows over the last 60 days. Very strong activity, which is an indicator to us that investors are getting more confident in the market and are looking to gain more broad-based equity exposure.
Okay, Richard, thank you so much for your time today, and thanks for your insight.
Thank you.